Good afternoon, everyone. Today, we are going to discuss key development changes which has been brought from 56 GST Council meeting. 50 GST Council meeting has brought a important decision which aim at simplifying the GST structure, rationalizing the tax rate, and facilitating the trade. This will not only ensure to reduce the tax anomalies and will also enhance the tax transparency in the system. So today our focus will be more on discussing the practical implications about the rate rationalization, trade facilitation measure, refund and ITC adjustment, structure and procedure reform which has been brought in forward through this 56 GST Council. Plus, we will be also discussing about the latest changes which has been brought out in Act and Rule and which is going to be applicable from 1st October 2025 apart from 56 GST Council meeting. Both will be discussing together. With me, I have CA Rajesh Kumar TR sir, our senior, and Jagdeesh, who is a head of branch head of our Vizag divisions. Rajesh sir, over to you.
Good afternoon, everyone. I think already lot of social media messages, WhatsApp messages, information, lot of things would have already flown, and some way or the other way, many of us have got some information, and in the flow of information, also some of misinformations also might have flowed. The purpose and objective of this particular session is to sequentially cover all the changes which are proposed, and also more from the perspective of the how it is going to impact the various sectors, rather than various sectors, various stakeholders, I can say. This particular changes is not intended for rationalization from the perspective of a businessman. We should understand that. Primarily, the objective of all these changes are to actually benefit, benefit the general public, common man, the citizen, who are the ultimate consumers. So we have to look at this particular changes essentially from the user of goods and services primarily. And looking from that perspective, if we see majority of the final consuming products, the taxes have been brought down, slashed down. So what the structural changes which has happened is primarily majority products have brought down to 5%, and wherever there were certain products which are taxed at 12% is again more or less brought down to 5%. Only few of them have been increased to 18%. So effectively there is a reduction of taxes on majority of these goods. Similarly, services. Again, the services, the rate of tax have been changed either from 12% to 5% or even 5% to nil also. Even for the goods, certain taxes have been reduced from 5% to nil or 12% to nil. There are only few products which have been increased from 12 to 18. So effectively, if you see, the rationalization is towards the 12% rate of tax would no more be existing, is what was heard by us, told to us. But however, technically we went through the uh, fine prints and whatever the changes, we found that only still the 12% exists. It exists for the bricks, certain type of bricks. Though one major type of bricks is all other type of bricks are taxed at 12% through a separate notification. Leaving this, we will not find any 12% rate for other goods or services. Now coming to the highest rate, what we were always thinking is 28%. Now again, they have removed that particular column and have made it 40%. There, what they have done is majority of the goods which the consumers were consuming are brought down from 28 to 18, and it is a major benefit to the ultimate consumers. So then what is this 40%? Many of the products which were actually taxed at 28% were also taxed with compensation cess, where both put together was resulting into certain tax rate between 40 to 45. So what they have done again there is that they have brought down that particular rate of tax to 40. So there also, if you see, the tax burden on the ultimate consumers have come down. So in overall, as a common man, as a user of goods and services, all these suggested changes is expected to bring down the final outflow for our consumptions. As to the what the taxes which we are paying to the government should come down is what is the effect of this change. However, though the intention of the government is to make these changes and make these products lesser value, uh, lesser cost to the consumers, the major challenge would arise. That would happen only when the all the chain in the businesses effectively passes on the benefit of that reduction the taxes to the ultimate consumer. There are various challenges which are going to be there. I think in the course of this particular deliberation, we are going to take up those, including effect of the change in MRP, all those aspects we want to cover. Now, coming into the perspective of the businessman, we are going to take each and every changes. Broadly, what I have to say again here, we were expecting that when they said rationalization, the procedural aspects are going to be simplified. But there appears to be a certain measures which they are trying to bring in, especially bringing out a separate basket of type of taxpayers, which is where the lesser, who's paying a lesser taxes per month, which will be explained later in the course of deliberation. So probably if any of the taxpayers falls into that class of taxpayers, then the rigors of the audit, investigation, inquiry may be little simpler. And because anyhow, they will be not the focus point for them to collect taxes. So probably in that direction, there appears to be a rationalization. In addition to this, from the compliance perspective, if one has to look at these changes are going to be effective from 22nd. Many of you may have a doubt. Why 22nd? Why couldn't have brought these changes from 1st October? There is no published information on this, but as far as the understanding goes, 22nd is the first day of Navratri, where the Navratri starts, and most of the consumptions increases. Various factors. More than that, as a uh, landmark event, they want to recognize this day where that Navaratri starts as the date of effective changes. So probably in that direction, they would have chosen this 22nd September as the day from which this change will be affected. As I was telling you, from the businessman perspective, the registered taxpayers perspective, these changes can be grouped into two major categories. One, there are goods which are taxed, they will not be taxable, which means that they'll be exempted. Is a one type of thing. The second, they were taxable, rates of tax have changed, are reduced. Is the second thing. The major practical compliance challenges will come in the case of the first category of a businessman. Why? Because they need to, if they have a stock of goods, they need to quantify that. they need to identify the extent of the tax amount involved in those stock, and they are required to reverse the input tax correspondingly. Similarly, if they there is a common thing, then they may have to adopt Rule 42 for the future transactions. So, and 43, there is a capital goods proportionate credit mechanism. So, like this, there is going to be different challenges which one has to face. I think in the course of that, we'll also address those things. One has to look back, broadly ask whether I am falling into this or that. In addition to this, wherever there are some changes in certain services where it says the tax rate is 5% without the benefit of ITC, they are also for the purpose of input tax credit are to be considered as exempt supplies. There are also similar challenge of reversal of credit, reversal of proportionate ITC on inputs, input service and capital goods would crop up. So these are the effects which one has to keep in mind while they are looking these particular changes. Now, when it comes to the other businesses impact, now if you see the working capital requirement, because of the tax rate reduction, there is going to be a reduction in the working capital because the blockage of the taxes with the customers will come down. In fact, when all these changes were being analyzed, when one of our professionals were discussing each other, we were pointing out the insurance companies' businesses and the road tax collection can also come down because the because the computation of the value for computation of the loan, I mean, whatever the road tax or for that matter, the insurance was including of GST. On all this goods carriage, the tax rate is reduced from 28 to 18%. So 10% reduction. So thereby the value is going to get reduced. The insured value is going to get reduced. The road tax collection value is going to get reduced. So there is going to be impact on various other aspects differently. Similarly, from the government perspective, if you see, we have been seeing a lot of increase in the tax collection from the government. And also, if we see, there have been targets which were fixed based on the existing trend which was there. With the revised tax rate, many places the expected collections may not happen, but the pressure may continue. In such scenario, there is a possibility that there's going to be lot of pressure on the tax administrative wings to ensure the higher collections, thereby that devolve upon various businessmen. So one has to make the government not only trying to reduce the tax, they should tell internally, you should not try to enforce the target, you need to revise the target downwards. But at the same time, government is saying for the states, don't worry, that reduction of the tax rate, though may affect your collection in the short term, but with the reduction of the tax rate, the purchasing power of the uh, citizens is going to increase. Thereby, their consumption is going to increase. Once the consumption is going to increase, again there is going to be a tax collection, tax buoyancy, and it's going to be again will be coming back to the same position. Is what is the estimated calculation from the government in spite of this reduction. So this is broadly the structure which I'm trying to tell that we need to keep in mind. I'll tell a couple of examples where the collections to the tax, I mean, the governments may come down. I was seeing one of the place where there is a tire manufacturing units, there is a dairies, milk booths, milk dairies, where there has been a reduction for the tires from 28 to 18. At the same time, there's a reduction of taxes on various milk and milk products. So thereby, they are looking at for that particular division or range, the collection of taxes will come down. So when the do a comparison figure, there is going to be a downward trend. So they may try to push that increase by various other factors. So this is one thing which we need to apprise the officers, that it is because of this changes the effect is, I mean, the collection has come down. One more final aspect I would like to explain and then leave it back to Jagdish and Ashika to take this forward. Uh, the ultimate effect of the cost for the consumers in the field like construction, steam, I mean, cement has been reduced from 28 to 18. So there is already a lot of representation from various construction bodies that the developers has to pass on the benefit of the GST on the cement which was earlier pay, should be passed on to the customers. But there again, when I was talking to many of the builders, developers, they said, sir, the rate of I mean, the basic rate of cement has increased multifold in the past couple of years. So, but our agreement would have been based on the old pricing. So already we are suffering. This is going to say, how can we pass on this benefit also to the customers? However, it is going to depend on the bargaining power of the consumer. How best he can bargain with the builders to get those benefits. Similar would be in many areas where the rates have been reduced, whether the benefit can come down. Here, please note that the anti-profiteering provisions, wherein you could have gone and complained, is no more available statutorily. So, therefore, it is only by virtue of the knowledge of the citizen, they have to demand the reduction of the uh, prices including the goods. For example, if the MRP pre GST pre this changes was 100 rupees, if they go to the shop, if the shop person is still charging 100, obviously it counts as a consumer for you to demand reduction. But what extent of reduction is a matter of a debate. Presently, it is not a straight 7% or 13%. It is much lesser in 11% and another 6 point, because that value includes taxes also. So keeping overall factors of these in nature, my analysis of these changes is that during a period of transition, many of us are going to face challenges in their respective roles. As a users, you will face challenge. As a businessman, you will face challenge. As a tax administrator, they will face challenge. So it is a challenging phase for everyone. At the same time, while operating a business, various procedural aspects to be taken care, including reference, I mean, modification in your software as to the information and data to be printed on the invoice. So these are the various factors I thought briefly I will bring to your attention. Then, with this, I hand over the proceedings further to Ashika or Jagdish, who is going to take care of it. And I will be pitching in whenever any aspects I need to elaborate. I will be pitching in and trying to explain those. Ashika, can you please take over? Ashika, you're there?
Yeah, yes, I am there.
Yeah.
I hope my screen is
Okay.
visible. Is
Yeah, it's
PPT is
visible.
visible?
It's visible.
Okay. Thank you, sir, for the intro and giving us a little brief about the impact which is going to happen due to this GST Council changes. So now we will be taking it forward. So I will be taking you towards the law and rule related changes, which is due to both, means which is has due to be 56 GST Council meeting, and plus now Finance Bill 2025. There were various clauses which were yet to be notified. Those clauses has also been now notified. So that will be applicable from 1st October 2025. So those changes also we will be discussing subsequently. So we will divide our flow of session in this three part. So first we will be discussing about law and rule related changes. Then we will be taking you through the rate changes which has been provided for goods and services. And there are various other recommendations which has been made by GST Council, but still no notification or circular has been issued with respect to the same. Now, the pointers which you are seeing on this PPT now, it's related to the Finance Act 2025 changes, which has been now notified and applicable from 1st October 2025. So our purpose for today's session is not just limit to 56, but also update you about the various other changes which is going to impact you, and so that you be ready with both, which is going to be implemented from 1st October also. First part is, if you will see, is plant or machinery versus plant and machinery. Under block credit, specifically for construction service and a works contract service, there is a specifically blockage of credit until and unless it is used for further supply. However, there is one exclusion to that block credit is the plant and machinery, plant or machinery. So if you will see the construction service, that is 17.5D, over there, the word which is used was plant or machinery. Now, there has been a long point of dispute that when the construction is happening, like of shopping mall, storage, warehouse, where the construction is done for a business purpose, which is subsequently going to be let out, or which is subsequently going to be sold. So there was a point of dispute that even though I am doing this construction, I'm not doing it for my own account. Own account means that I'm not going to use it for my personal purpose or official purpose. I am going to use this property to further generate the revenue, which obviously on renting or storage or service, I'm going to pay GST. So when I'm liable to pay on my outward supply generated from this construction of building or shopping mall, then why I should not be allowed the ITC? Safari retreat case, which was a classic case, which from Odisha High Court went up to Supreme Court. And Supreme Court, based on the word plant or machinery, very beautifully interpreted the word and brought out the distinction between these two terms by way of or and where they also held that even though the construction, if it is being used for further supply, or if it can be regarded as a plan because it's been used for specific purpose, ITC should be allowed. Now, to nullify this judgment of Supreme Court in the Finance Act, they propose to change this word plant or machinery with plant and machinery to end the dispute and to specifically show that they are not interested to give the credit, because huge credit goes into the construction line. And they are very clearly that even if building or property you are using for further supply, where you are paying outward tax, but they are very clear to deny the ITC. It's a similar like what they did with club and association service, where the principle of mutuality was held by Supreme Court, but they disregarded it and specifically provided under the definition of supply that I am going to tax it. I will treat the member and the association separately. Doesn't matter what the decision came. Similarly, over here also, they have given their clear clarification that they don't want to give the ITC of the construction of building, shopping mall, warehouse, even though they are being used for further supply. So this has now been enacted. So the person who are in this line, they need to be careful because now they have to decide. Earlier, based on Supreme Court judgment, many would have taken ITC on it. because majorly people was taking the ITC, parking the ITC. They were not utilizing it. Based on Supreme Court judgment, they might have utilized it. And this change, they just not brought from 1st October 25, they have retrospectively did from July 2017. So they disallowing you from the day GST was implemented. So now a call need to be taken whether we need to further fight or we are going to reverse the ITC to the extent if avail. Now, second change, the changes which I am discussing, it belongs to Finance Act, not
Ashika,
56. Yeah.
Ashika, I would like to add a couple of points. Yeah. Basically, in 17.5 is a block credit condition. I mean, scenarios where the credit will be blocked. That means that you will not be eligible. There are two clauses, 17.5 C and D. C was pertaining to works contract. D was pertaining to goods or services used for construction of immovable property. Both were for immovable property. However, there was an exclusion there. Exclusion, which said plant or machinery at one place, plant and machinery at one place. In clause C, they use the word plant and machinery. In clause C, C, they use plant and machinery. Clause D, they use plant or machinery. Further down that particular provision, there's an explanation which was given defining what is a plant and machinery. In that term, plant and machinery, they specifically excluded building, civil structure, etc., etc. Now, all the question which came up was when they are arguing before the Supreme Court, they felt that clause C argument, they can't take much. So their focus was only on clause D. And in clause D also, they said the government's contention of the credit on relating to all the constructions is restricted. We can take a exclusion through this plant or machinery. Plant and machinery excludes civil structure, but not plant or machinery. The plant in the generic meaning is having a wider connotation. Even it can include a theater, etc., or the line of argument. Supreme Court appreciated that and confirmed, yes, we agree with you. There are two separate clauses. It's not a typing error. It is actually intentionally government wanted to not to restrict the credit. So accordingly, they allowed this benefit. Supreme Court said the benefit is eligible if it is used as a plant and machinery. How is you are going to determine as a plant and machinery? Functionality test. All these were fine, but again, the council had a discussion, the government had a discussion. They decided to do a retrospective changes for this. As Ashika explained, all those things is fine. Now it's a past. Now effective 1st October, the definitions have been changed to plant and machinery. Therefore, any credit relating to construction of a building, which is in the nature of building, etc., you cannot take credit. Having said this, Supreme Court at one paragraph did mention also, they interpret the term on account, where they said if any property is being rented, it is not for own account. Still, that loophole exists as per certain legal critics. So, anybody who has a substantial credit, it is suggested that please do take a due consultation before taking any action to either reverse or not to reverse, whatever it is, because this is not so easy a topic where it can be merely understood based on some hearing or thing, unless you have a detailed discussion, keeping your facts on the table. So this is what I wanted to just emphasize and highlight. If your stake involved in this area is huge, better have a proper consultation with whoever you consult regularly. Yeah, Ashika, you can proceed next.
Next change relates to credit note. Now, what we have noticed is, even though after furnishing the detail in GSTR1, department were disallowing the ITC on the ground to prove that whether the recipient has not availed the ITC. And accordingly, a circular was issued where the suppliers were required to gather the declaration from their recipient to substantiate the fact that they have not they have reversed the ITC on account of credit note issued. Now they have made changes in section 34, which deals with the reporting of credit note and debit note. For credit note, they are saying tax benefit will be available subject to the following condition. First condition is obviously it should be reported in R1 and 3B in order to claim it. Now the second condition, which is basically on the other party, that the person to whom you are supplying. So now they are saying similarly that recipient should reverse the ITC. But recipient will reverse the ITC only when it is a B2B supply. Now the wordings over here which you are seeing is it's not as is it as per the wording written in the act. We have simplified it for our better understanding. So if it is a registered recipient, they are saying it need to be assured that recipient has reversed the ITC. If it is B2C supply, now if B2C supply is there, if I have collected the tax from them, paid to the government, and thereafter I am raising a credit note, but I am not changing or I am not passing on that reduction to the our counterparty. So then they are saying what need to be checked is incident of tax. Means they are saying this credit note benefit will be available only when incident of tax has not been passed on. So if I collected from B2C, I am using the term B2B, B2C. It is not what has been used, but it's a generic way I am saying, because if B2B is there, obviously you will be reporting in R1. It will get auto-populated in GSTR 2B of the recipient, and based on auto-populated in 3B also of the recipient, net ITC will come. So accordingly, reversal will happen. But where the checking will not happen, it is B2C. So when you are doing B2C, it goes in a summary level in R1. So nobody will be come to know whether that tax incident has been bear by the supplier or it has been passed on to the counterparty recipient. So over there, they are saying it need to be ensured that incident of tax has not been passed on. That obviously they will come to know from the amount collected by you from that person. So this is putting a one more condition if you see, because now B2C credit note will become a challenge. Reason being, on the spot discount or reduction in value is okay. But the discount or reduction in value which is happening in the case of B2C supply, it need to be properly supported by document, because your bank account should show that you have collected net value, not gross. Otherwise, they will think that incident of tax has been passed on, and accordingly they may not allow you the credit note benefit. So due to this change, now as a SSC, we need to be more careful when we are giving the discount and how it should be treated. So before you claim any tax benefit on account of credit note, be careful these obligations are met. Then voucher. Voucher has been a point of discussion, a point of issue long back. There was a lot of dispute when the tax should be paid on it, what rate should be applied, because sometimes voucher does not belongs to one single supply. It can be get exchange or it can be used against any supply which might have different rates. Now they have clarified that voucher is not equivalent to supply because it was in the nature of consideration. But what was happening due to the provisions provided, even though when the voucher was being issued, GST was required to be paid on it by the supplier, whoever are issuing the voucher. Now, there a separate track need to be kept when it is redeemed against what it is reading, whether it got lapse. So based on that, our outward tax liability were getting changed and lot of tracking was happening. And obviously, voucher is in the nature of actionable claim, or what we can say is an instrument which can be adjusted against the consideration payable. So now they have clarified that voucher will not be treated as a supply. It is an instrument or actionable claim, or what we can put it is in nature of a obligation to adjust against the future payment. So they said it will not be a supply. So now no GST is applicable. So whatever may be the voucher nature, gift voucher or other voucher types, you are not required to pay GST on it. GST will be applicable when the actual supply happened, even though it has been adjusted with the voucher. Payment has been adjusted with the voucher. Local authority, they have defined the local fund and municipal fund for better clarity that what will qualify as a local authority, because there are various exemption which is provided under the act, which will qualify when either you provide to government or local authority. So there were little anomaly how the local authority this fund, because there are certain not in the local authority, but there are certain department which are managing this fund. So whether they qualified as local authority, now they have specifically defined. Based on that, it will be decided whether they will qualified as LA or not. Now, appeal related. Here, this is related to 56 GST Council. 3 points and 2 points are related to 56 GST Council and 2 points related to your Finance Act. So first 2 points they have said about the appellate tribunal. Now they are saying appellate tribunal will be operational from September 2025, though in council recommendation they have said yet to see. Then they are saying hearing will start from December 25. That is also, we have to see whether it will be started or not, because if you will see, as the appellate tribunal has not formed, what they have said, they have put all the appeal on hold. And in order that recovery is not made, they have come up with a clarification that additional pre-deposit of 10%, which need to be done for appeal to the appellate tribunal, you pay it and recovery proceeding will not happen. Now they have given a special different time limit where the order has been passed prior to 1st April 2026. Order April 26. Then they are saying time limit is 30th June 2026. So whoever order has been issued by appeal officer and you are yet to file an appeal before appellate tribunal, you have a time till June 2026. However, they are saying appeal acceptance will start from September 25. As of now, nothing has started. And the hearing from December 25, what they have said in GST Council is yet to be seen. Then the order which will be passed after April 26, normal time limit, that is 3+1, which is provided in the law, will be applicable. So if you have any appeal, which is before appellate tribunal, just make sure you do the 10% additional pre-deposit, because even though they have given a deadline 30th June 2026, but still there is no mechanism to file an appeal for appellate tribunal. Another important change is about pre-deposit. This is through Act. Earlier, we are required to, means not earlier, now also we are required to make pre-deposit of the tax amount. So we do at the first level 10% of the tax amount, and at the second level 20% of the tax amount, which is basically 10 plus 10, because at first level I did 10, in second level I will again do extra 10, so total 20%. But we were doing of tax. Now there are cases where order has been passed only of imposing penalty, because there may be a cases you might have paid the tax and interest but disputing penalty. Now is your chance. If any one of you have any case which relate to only penalty, just make sure you file the appeal before 30th September. Otherwise, you are required to make this mandatory pre-deposit. like it is 10% of tax. Here they are saying 10% of penalty, or in case of second appeal, 20% of penalty. Because we also had a case where it was only of penalty, and penalty amount was of good. As we filed before this been notified, so we were safe. It was around many appeals where we have been able to save this mandatory pre-deposit, because it also act as a cost. So if you have any, make sure you file before 30th September, because this mandatory pre-deposit is applicable from 1st October 2025. Where you have with tax, interest and penalty, you nothing need to worry, because earlier also you are required to make pre-deposit, now also. But if you have only of penalty, then you need to be careful with it. Another changes which they have brought is with regard to appeal forms. So you would have noticed when we file an appeal, we get a provisional acknowledgement. But that provisional acknowledgement doesn't have any form name and all. Now they have given two forms. First provisional acknowledgement, they are saying it to be issued in Part A of GSTR to, of the GST APL 2A, and final acknowledgement will be issued in Part B. These are form changes. And they have also said when the appellate tribunal will be filing an order. Now you will notice whenever an order is issued, along with that, you get two things. One is detailed order, one is summary of order. Similarly, for appellate tribunal also, they are saying, obviously there will be a detailed order, there will be a summary order. For summary order also, they have specified a form for appellate tribunal APL 04A. And there are many other changes in appeal form of relating to tribunal filing of appeal they have done. So, and all the tribunal related form they have given in a modified way in a much detailed manner, so that many aspects can be covered. This also again relate to act changes. This is related to appellate tribunal hearing matter. Now, I don't know how many of you have attended earlier session which we did on appellate tribunal. Over there, we explained that there will be a two type of bench. One is state bench, one is principal bench. Every state will be having a state bench and principal bench at Delhi. Now they have given what are the matter will be heard by principal bench. These are the three specific matters which will be only and only heard by a principal bench. First, though, we know all the place of supply issue related will be heard by principal bench. Then ISD, input service distributor, that also will be heard by principal bench. Then a principal bench will also act as an anti-profiteering authority also. Means when anti-profiteering authority passed the order, there was no appellate mechanism that anybody can go for appeal. Principal bench will now be enjoying appeal power over the anti-profiteering cases also. Then if there is any case which involve question of law and it is pending in two or more state bench of the same party, means GSTN levels, we are talking about at PAN level, multi-GSTN having same question of law in different state benches, that also can be heard by a principal bench. Now, under a bench, there is a concept called single member, double member. Normally, single members are the technical members, so they have given a limit and what type of case they can hear. Single member will hear only up to the quantum involved in an order up to 50 lakhs. And plus, there should be no question of law involved. If question of law is involved, it will go to double member bench. So these are in relation to appellate tribunal hearing matter mechanism, which obviously with the time when the setup will happen, this will all come as handy. Now, provisional refund. Now, over here, GST Council has recommended for inverted duty structure. Provisional refund is allowed only in case of zero rated supply, which is basically export of goods or services or SEZ supply. In those cases only provisional refund is allowed. Now it has been recommended that this will also be extended to inverted duty structure. So here within 7 days, you will get 90% of the refund. due to the provision, but this recommendation is yet to be provided in the law. It has not been provided, it's just recommended. Other changes which are there, which has been implemented are, now they are going to sanction within 15 days, but it will be based on identification and evaluation of risks. Earlier, just based on the application you filed, they will verify that refund application, and if everything is okay, they will sanction. Now they have changed the term that they will see whether you are a risky SSE or not. If you are a risky SSE, then they may not allow you the provisional refund. But it will be, time will say how they will evaluate this risky SSE. Because as of now in law, there is nothing. So if we see this term, even for zero rated supply, now they might disallow the provisional refund based on this assessment. Now, these are the few categories where they have said, I will not allow provisional refund. I am using the word multiple time provisional refund, but I just want to say one thing is, provisional refund doesn't mean pausing the refund or giving the refund. So here it is just initially they are giving the refund. If provisional refund is stopped or hold due to something, it doesn't mean you are not eligible for refund. It's just that the benefit which they have ensured for immediate liquidity of the fund for the SSC, that even though we haven't verified your claim and all 100%, but I am giving you 90% refund by accepting that you would be correct, that you are eligible for refund, paperwork is correct. It doesn't mean that if provisional refund not granted, then main refund will also not be granted. It's just a discretion, is just given to the officer, where based on the risk, they will decide. If all the paperwork, everything is correct, then even though provisional refund is not given, but you will be eligible for full refund with the refund order in RFD 06. But these are the few other cases where they have specifically mentioned for this type of goods, Akriya net, pan masala, tobacco product, they are not going to give any provisional refund. So after verification, the final refund only you will get. Plus the person whose Aadhaar authentication are pending. So just go check, because still now I have found in many of the SSC who comes to us, Aadhaar authentication is not done. Please do it, because this 90% initial sanction mean a lot, because we also know how much time officer take. They got a 60 days time to to verify the refund. But there has been a cases that even this 60 days time limit to verify the refund is also exceeded. So this mean a lot if you get the refund within 7 days, because they are sanctioning 90% of it. This is also act related changes. Now there has been a cases where goods still lying in a custom zone, where the goods are in SEZ zone or free trade warehousing zone, and sale is happening directly. Goods is not moving. Goods is still lying in a warehouse only. Only transfer of title is been happened from one person to another, but GST was being levied. Now they have said there is no need to levy GST until and unless good is clear for export or it is clear for DTA. If it is for export, no GST, but if it's clear for DTA, then GST was applicable. So based on that, now they are saying for transfer, when the goods still lying in warehouse from one person to another person, will not be considered as supply until and unless ultimate supply, means ultimate sale, has been made. Just based on transfer of title, they are not saying. When the movement of goods happen outside this zone, then only you are liable to pay GST. Now, next question which comes is, what about where tax has been paid? They have said where taxes has been paid, I am not going to give you the refund. And this changes they have brought from 1st July 2017. Another question will arise if they are treating as a no supply. It's a schedule 3 item, which says it's neither a supply of goods, neither a supply of service. So as it become a no supply, where ITC to be reversed, answer is no. Section 17 to specifically exclude that Schedule 3 item will not be considered for the calculation of Rule 42 or 43. So you are not required to reverse any ITC on this account. This is now another thing which is operational from 1st October 2025, track and trace mechanism for certain goods. This certain goods has still not been notified, but whoever in this good have to make sure they have a unique identification mark on goods which they are going to specify. Otherwise, they have specified that I am going to levy penalty whoever do non-compliances. New section has been introduced, 122B. This is also going to be operational from 1st October 2025. Post-sale discount. This is the recent clarification has been issued based on GST Council recommendation. There have been a lot of issues that where the financial and commercial credit note has been issued. So GST department used to disallow ITC on the ground that as you have not made payment to your supplier to the extent of this credit note issue, commercial and financial, you are required to reverse the ITC. Now with this clarification, all this reversal has now put to an end. It has specifically clarified that you are not required to reverse the ITC. And it is quite logical. See, at the one place, when the supplier is issuing me invoice, it has paid tax on 100 rupees. It's not the case due to this commercial credit note. Supplier is not going to reduce their tax liability. They can't reduce the tax liability because it is not under 34. So if they are not getting the benefit of tax reduction, government is collecting on the total value only, then why the recipient should be disallowed the ITC, which was the normal point of discussion or dispute with the officer. But they will stick that payment to supplier need to be made, which is not done, I am disallowed. But this clarification will put this thing on. And so this is one is a welcome clarification. Second issue which happened is between manufacturer, distributor and dealer. Now over there, what we have seen that manufacturer used to give post-sale discount to obviously to boost the sale or sorry, obviously to boost the sale, manufacturer give post-sale discount to distributor. Now, these discounts which are given is always treated as an income in the hand of the distributor by the department. As a result, resulting into even to pay tax on this type of discount. Now, circular has clarified that this type of discount is not a consideration and no GST is applicable on the same. This type of discount will qualify as a consideration only and only when it is specifically specified that I will give this discount if you do this type of promotional activity, or I will give you this discount only when to enable the dealer to sell at a agreed price to the end customer. So there should be a quid pro quo. Then only this type of discount will be liable under GST. If there is no quid pro quo, even though manufacturer has given this type of discount to their distributor or dealer, no GST will be applicable on the same. Sir, you want to add something on this?
No, I think there they talk about privity of a contract between the manufacturer and the ultimate customers, and in between coming and supporting that is what is covered there. I think they practically I don't see such scenarios. So effectively we can universally assume the discounts part of it will not be effectively possible unless there is a specific campaigning, etc., which you will talk about next, I think, right? The consideration. Where they say there's a specific campaign they do and a specific consideration for that. That only will become taxable is what has been clarified. But overall, I think this is going to reduce a lot of audit points in majority of the cases where on the credit side they found a discount incentives. Those cases will get dropped with this circular. Yeah, you can proceed.
Sir, other recommend.
You can continue.
These are other recommendations which has been made but not yet notified or clarified. One of the important recommendation which has been made is about intermediary service. Now, if you will notice, for place of supply for intermediary service, in case where provider or receiver, any one of them is outside India, was considered to be the location of service provider. So the Indian intermediary was being taxed on the ground that place of supply is in India. Now they are proposing to change it to default rule. What is default rule? That recipient is, place of supply will be considered of a recipient, not of a service provider. So over here, Indian intermediaries or Indian brokers will get the advantage of now converting this taxable supply into a export service. But still yet changes has not been made in the act. So till now they are taxable only, they have to pay tax. But the moment it is implemented, supply to a recipient located outside India will qualify as export of service, benefiting them in reducing their cost, because they will get the tax benefit, which they might be adding to their service to be collected from the recipient and then pay to the government. Second, they would be also eligible for refund. Similarly, as Indian intermediaries will qualify for export, outside parties, intermediaries, broker, agent who are providing service in India will qualify as import. So it will become then import of service. And as a taxpayer in India availing this service outside that, I would be paying tax under RCM. But obviously the tax which I am paying under RCM, for this, I would be eligible to ITC. But eligibility of ITC will subject to various conditions. One of the conditions which I want to highlight, that those services should be procured for supplying taxable supply in India. If those are in relation to taxable supply, then you would be eligible. Now, taxable doesn't mean just supply on which you are paying tax, even for export related. Because if you have hire a intermediate agent who is located outside India to get you a better market for your good outside India, and you are exporting goods outside India based on that, then also you are eligible for ITC. So taxable supply plus zero rated supply, then what tax paid under RCM would be eligible as ITC. Now the intermediary service which is happening within India, means provider and receiver within India, there is no change. It's still the same, that if it is supplied to a registered recipient location, based on that, place of supply will be decided. But where it is happening outside, so then it need to be checked. Basically, effect has got changed. Earlier, what was considered as export now has become import. Now, what was considered as import has become export. If I say that vice versa has happened. Not directly, I will say vice versa, but what was taxable, now provider in India was taxable, now it will get export benefit. Now receiver, the provider outside India will be considered as import of service and tax need to be paid under RC. This is still not implemented. It is yet to be implemented. So as of now, this currently is what is operating. So if you are an intermediary, you have to still paying tax until the law get amended, because this change will come through law and it will take time. Another proposal which they have made, this is also proposal only, they have recommended, still not implemented. They are going to introduce simplified GST registration scheme. So over there, what they are going to do is they have divided into two. One where there is a supply through e-commerce operator, and when there is a supply other than e-commerce operator. So they are saying they will give you registration within 3 days. Means in this scheme, within 3 days, you will get the registration. However, it comes with one condition, that your output tax liability should not be more than 2.5 lakh per month. So there is a one condition. If you fall under this, then you can opt under this scheme and get the registration within 3 days. And they are also saying that you will have the option to opt in and withdraw from scheme, but we have to see how it is going to work. Supply through e-commerce operator. Here, what they are planning is, because we have seen that when we made a supply through e-commerce, state boundaries doesn't matter. Because on a website, you may be a person who is located in Calcutta, West Bengal, may be supplying goods to or service either to Bangalore, located in Karnataka. Now, it's boundaries, state boundaries or country boundary doesn't matter. It goes one place to another. But what the issue was happening is about the place of business. How we will maintain in each state place of business. So that is actually not possible. Even to make the supply also, to maintain the stock also, people are taking warehouse and maintaining. So how just for warehouse, I have to add that as my place of business. Now they are planning how that modality will work, but still nothing much mentioned, but they are going to address this issue also, which will be also welcome, because the way they will mention, it will help us that we also don't require to do multiples or give additional place of business multiple. We have to see how that will operate. Now I discussed about the post-sale discount clarification which they brought in, which basically deals with the manufacturer, dealer and distributor. But another pain point which was there in post-sale discount is reduction in output tax liability was available only when this condition was satisfied. What you are giving at this spot, it's okay. That too automatically getting reduced from invoice and you were paying tax. But what is happening after the sale is made, after the invoice is raised, was the point of dispute. Because they said those post-sale discount would be eligible for reduction only when it is in the terms of agreement. So there should be specific pre-decided that I will give you this discount on basis of some condition, restriction, terms, whatever may be the scenario, but there should be a pre-decided. And when you are giving, it should be linked to relevant invoice also. Means this discount is given against this invoice should also be there. So which was becoming a pain point. Now they have decided that they will remove this pain point. So there is no need that there should be pre-decided agreement. Even though after say some agreement you enter orally, verbally, whatever may be the scenario, they will also consider that as a post-sale discount, which is a welcome change. But obviously, you will get the benefit of the discount, means reduction in output, only when your recipient reverse the ITC. So compliance of section 34, which we discussed at the starting of our session about the act changes, B2B, if a registered recipient reverse the ITC, B2C, if incident of tax not passed on, then only you will be eligible. Plus, I also discussed that department are now insisting to get a declaration or certificate from recipient that they have reversed the ITC. That is also they are planning to remove that circular, which is also a good thing. Because when the data is furnished in R1, getting auto-populated in 2B, why to penalize supplier? Because anyhow on recipient, if they have availed more than 2B, they will get a notice. It's not the case they are going to leave the recipient due to 2B versus 3B difference. Then again putting it on supplier that credit note recipient has reversed is another pain point, because how many credit note it may be issued, how many recipient it has been issued, and it's very difficult to get from each and every recipient. This one, what they recommended is very a small thing. There for sanctioning the refund, there is a threshold limit that it should be more than 1,000, then only refund will be sanctioned. Now over here, they are saying this threshold limit, we will remove for refund of export with payment of tax. So if you are having export with payment of tax, which is getting you 1,000 refund, but it's of no use because nobody do export with payment of tax for 1,000. But they are giving that relaxation. But these are only recommendation yet not implemented. Jagdish, over to you.
Yeah, yes. Let me share my screen. Yes, good afternoon all. So now we'll see the what are all the changes in the rates with respect to the goods, and later we'll see the service rate changes. So going into this, just a second. Yes. So for the goods, we all know that principal rate notification is 1 bar 2017 for taxable goods, and for exempted goods it is 2 bar 2017. So after implementation of GST, there are a lot of amendments to this notification. So they have now completely rescinded these two notification, and a new notification has issued. Now we have to refer only two notification instead of referring so many scattered amended notification. So for taxable goods, you have to refer 9 bar 2025, and for exempted goods, you have to refer 10 bar 2025 rate notifications. So now see what are all the changes in which sector there is more benefit and what sectors there is a higher imposition of the tax rates. So if we see, I have put all these sector wise details. I mean, we'll discuss in detail about each sector wise in the later slides. Just I want to give a idea what are all uh, goods or in which sectors GST rate is decreasing, and what are all the items GST is increasing. So if you see here, this is the summary of all the notifications. So just before I discussed that 1 bar 2017, that is for the taxable goods, now it's becoming 9 bar 2025. Completely the 1 bar 2017 and 2 bar 2017 has rescinded, and in place of that 9 bar 2025 and 10 bar 2025 has been issued. And for the service, coming to the services, still they have retained the same, the 11 bar 2025, that is for the taxable services, and 12 bar 2025 for the exempted services. They have retained the same, and they have made the amendments to this notification by way of uh, no, amended notification. So coming to the specified handicraft goods, they have made the amendment by way of 13 bar 2025 and 14 bar uh, uh, and fly ash bricks. We'll discuss about each of these notifications. So just to anyway, we'll share this PPT to you. You can refer for what for goods, what notification we need to refer, and all the things you can do on your own. So if you see the taxable rate notification for the goods, you can see there are 7 schedules. So as Rajesh sir said in the beginning that they have earlier we have a tax structure of 4 types of taxes are there: 5%, 12%, 18%, 28%. Now they have measured all that to 5 and 18. But here, if you see this, there are 7 schedules in the taxable rate notification. Earlier we discussed that 28% is not there, but you can see here that 28% rate is there. In 28%, only few goods are there, like sin goods. Tobacco, cigarette, and pan masala, all those, like only 6 items are there now in the 28%. So otherwise, there are no goods in the 28% slab. So if you see here, the 3% is on gold and silver, still the 3% is continuing. There is no change in the gold rates. Uh, so whereas other products, you can see the change. Most of the 80% of the items are now falling under 5% slab, and only the manufactured goods are falling under 18%. So if you see here, what are all goods are falling in which schedule? So basic food items, raw material, and basic common man items are falling under 5% slab, whereas most manufactured goods, industrial products, and consumer durable goods like television, refrigerator, and all that things are falling under 18%. Earlier, they are in a 28% slab. And also luxury items and sin goods are now covered under 40%. Even in this, only 1% of goods are covering under 40% slab. And coming to the precious metal, gold, silver, earlier 3%, now also 3%. Only as we discussed before that on the 28% slab, only tobacco products and pan masala are there. Only 6 items are there, yeah, under 28% slab. And one more thing, that earlier there is a compensation cess. Now the compensation cess has removed completely. Only for the sin goods, compensation cess are still continuing. For the sin goods and also the carbonated beverages and aerated water, still compensation levy is continuing. So starts with the now we'll discuss in detail the sector wise. Starts with the real estate sector. So this construction sector is considered as a significant growth engine because it is contributing nearly 13% to the GDP. So if we see the changes in the real estate sector, the cement, which is primary material required in the construction industry, reduced to 18%. Earlier, it is under 28%. Now the cement is under 18%. Not only the cement, also the building materials like marble, granite block, sand, lime brick, sand lime bricks. Now falling under 5%. Earlier it is 12%. So these are drastically reducing the construction cost. Not only the output tax liability, but also uh, uh, so because of the reduction in the tax rate, input cost is getting reduced for the builders. Because of this, viability of the projects will get increased, and also the affordability for the consumers will also come down, and it increases the profitability to the builders also. And also coming to the bricks part, so, flash bricks, there is a concessional composition, special composition scheme for bricks to the brick manufacturers earlier, which was introduced in the 2022. The same is continuing now also. The 56 GST Council has not recommended any change with respect to the brick manufacturers. So earlier there is a special composition scheme which they need to pay 6% GST without claiming any ITC. So now yes. So now, even now that special compensation scheme is continuing and 12% GST with ITC claim. So only 12% is there only for the brick manufacturers. So as I said that no changes were recommended for the most brick type. Only the sand lime bricks, which was taxable at 12% previously, now it is under 5%. So the scheme is given only for the brick manufacturer. That 12% rate is applicable only for this. Otherwise, there is no 12% now. So coming to the vehicle rate rationalization. So after Narendra Modi Honorable Prime Minister announcement on August 15, there is a big buzz in the automobile industry. So we'll see what the changes in the automobile industry. So earlier, every vehicle, whether it is a car or bike, whatever it may be, every vehicle is covering under 28% GST. The basic, the compensation says is ranges from 1% to 22% based upon the type of the vehicle. If it is a small car, then the cess will not be there. If it is based on the length and the power of the engine, it increases up to the 22%. 22% cess is applicable for the SUVs, MUVs, and the 17% basic 17% is applicable for all the vehicles whose length is more than 4000 mm, and if it is a petrol car, their power has to be more than 1200 cc, and in case of diesel car, if power is more than 1500 cc, then it will be considered as a big vehicle. Okay. If it is a big vehicle, then minimum 70%, 17% cess will be there. If it is an SUV or MVV more than 2000 cc, in that case, 22% cess is there. So, ideally, what earlier we used to pay 50% of taxes, 28% GST plus 22% cess. So now the cess has removed. So now all vehicles are not only cess has got reduced, for small cars, 28% GST has reduced to 18%. So straight away 10% discount you can expect from the automobile dealers. Not only small car, and also when coming to the big cars, they have uh, classified to the 40%. Just before we discussed that all the luxury goods have put it on the 40% slab. So earlier it is 45 to 50%. Now anyway, even if it is a luxury car also, big cars also, you are getting the 10% benefit. Now coming to the two-wheelers. For two-wheelers, earlier it is 28%. Now they are reducing it to the 18%, provided their engine power should be less than 350 cc. If it is more than 350 cc, again it will fall under 40% rate slab. And three-wheelers and goods transport vehicles and trucks all are covering under 18%. So provided only one exception is that agricultural vehicles like tractors and all, earlier it is 12%, now it is falling under 5%. So and tractor tire parts also now falling under 5%. Because of this, the cost of farming will get reduced. So just a second. So uh, uh, so this is all about the changes in the automobile sector. So now coming to the in previous slide we have discussed about the new vehicles. Now we'll see the changes with respect to the sale of old vehicles. So in the 2018, by way of rate notification 8/2018 notification, government council has given the one concessional marginal scheme. Under this marginal scheme, you have to pay the tax on, let's see, just I will explain what is marginal scheme. If the sale price minus the depreciated value is on positive, then you need to pay the tax. If the sale price is below your depreciated value, then you no need to pay any tax. That means if we have a margin on sale of your whole vehicle, then only you need to pay the tax. If the margin is negative, you no need to pay any tax. Provided one of the condition is that on that vehicle you should not take input tax credit, whether in the GST regime or if you have procured that vehicle in the pre-GST regime also, except that time excise is there. If you have not taken any credit on that vehicle, if you are selling that vehicle, if that selling price is more than the depreciated value, I mean, in your books, so in that case, if it is positive, then you need to pay the tax. If it is negative, you no need to pay any tax. So what rate need to be applied? In case of all other vehicles other than small vehicles, it is 12% earlier. Now that 12% is not there. They have removed that 12%. That's the reason now on sale of old vehicles, which small category. So now we need to pay the tax of 18%. And coming to the SUVs, earlier big vehicles like more than 1500 cc in case of diesel cars. In that case, now we need to pay the 40% tax. Earlier, it is 18%. So new cars are getting the prices will come down, whereas for the old vehicle the prices will go up little bit. So this is all about the coming to the next part, leasing or rental services under new GST reforms. So earlier leasing with operator, whereas in that the fuel cost is included. In that case, in the previous, I mean GST 1.2, I can say, so 12% with ITC is there. Now they have increased it to 18% with ITC. Leasing without operator. Vehicles attracting 40%, leasing also be taxed at 40%. Let's say if your vehicle purchase, I mean, if it is a big vehicle, GST on that vehicle will be 40%, right? Even if you lease out that vehicle to the other party, even in that case, the applicable GST rate is 40% for leasing. Let's say company has bought an vehicle, on that vehicle 40% has they have paid the 40% GST on that. If the same vehicle is given on lease to the director, so in that case they may think that for leasing it is 18%, I can pay the 18% tax. The answer is not 18%. You have to pay even on the leasing as 40%. Whatever the rate applicable at the on purchase of that car, the same rate will apply even on the leasing also. So coming down to the textile sector. So earlier if the apparel, if apparel or clothes having a price less than 1,000, applicable GST rate is 5%. Otherwise, we used to pay at 12%. If any shirt price, let's take a shirt price. If it is less than 1,000, then we need to pay the GST of 5%. Now they have increased the slab to 2,500. So now up to 2,500, if any shirt is having a value of 2,500, we need to pay the 5% tax only. If it is increased to, if it is more than 2,500, now we need to pay 18%. Earlier, if it is more than 1,000, it is 12%. But now they have put all those goods to the 18% slab. And also not only the end products, but also to the manufacturers. For them also the man-made the prime important raw material for manufacturing these fabrics like synthetic fiber man-made, and earlier they used to fall under 5%, sorry, 12% and 18%. Even all those raw materials also now bring down to the 5%. Usually, this is the industry which faced the inverted duty structure problem. A lot of ITC gets accumulated due to the inverted duty structure because they used to pay the high rate of taxes on their inputs, but their outwards are if 5%. Now the problem now that problem will not be there because all the raw material, 98% raw materials are now falling under the 5%. Only the like machinery and all that thing, capex are still at an 18% slab. So coming to the FMCG sector, which is the common man items, which can we say? So most of the items are under 5% or nil rated goods. So if you see here, UHT milk, UHT milk, paneer, pizza, bread are completely exempted. The condensed milk, juices, personal care items like shampoo, toothpaste are at 5%. So daily essential are now falling under 5%, not even the 18%. So they have made the 5% or the 0%. So you can see the drastic price difference compared to the GST 1.0 and 2.0. And coming to the sin goods, they want to discourage the consumption of the sin goods. That's the reason they have put all the sin goods like pan masala, aerated beverages, caffeinated drinks, have put it on the 40% slab. These changes make daily necessities more affordable, obviously. So even they want to discourage the consumption of the aerated beverages and the carbonated drinks. So that's the reason they have put it on the 40% slab. So now coming to the agriculture, which is the backbone of India. Yeah, already we discussed about the vehicle scheme. The tractors and their parts earlier 12%, now it is put under 5%. And not only that, even all agriculture machinery, and also all that machinery they have put it under 5%. Earlier it is under 12%. Not only that, and also the fertilizers, including sulfuric acid, nitric acid, ammonia, all that under 5% rate category. Renewable energy. So this industry also used to face the inverted duty structure. Inverted duty structure accumulation of the credit due to the low rate of tax. Now all the raw materials like solar panels, photovoltaic cells and modules, solar water heaters, power generator, lantern, all that they have kept it under 5%. So education sector, all product they have put it under 0%. The cost of education will come down definitely. Reduce lower in except only 2 to 3 items of the which relates to the education sectors are in the 18% like a geometric box, all that. Otherwise all books, pencils, crayons are all under are all falling under nil rate of tax. Coming to the pharmaceutical pharma industry, so nearly 36 life-saving drugs put it under 0% category. Earlier they used under 18%, and essential medicines and also diagnostic kits and medical devices, all that under 5% now. Not only the medicines and also the medical instruments, surgical instruments, and medical devices, all that under 5%. Because of this, capex will get lower and cost of healthcare will also come down. Goods listed for petroleum operations. Yes. So recently, 11/20/25 notification has issued. In this case, till now we have discussed that rates has decreased, but in this case, for petroleum industry like drilling industry, earlier goods listed for petroleum operation like drilling rigs, marine vessels, equipment. This is applicable for the ONGC like the companies. Earlier, they used to have a concessional rate 5% tax, but now they moved it to the 18%. Already notification has issued. It's a notification is 11/20/25. Handicrafts. So most of the handicrafts are reduced from 12 to 5%. So so that they can sell it at a competitive price in the domestic market as well as in the foreign markets. This handicrafts schedule also I have in the previous slides. That's all. What are all the handicrafts rates provided in the previous slides? So, oh, sorry. Here, 13/20/25 handicraft goods. So most handicraft goods now uniformly taxed at 2.5%, that is 5% tax. Some items like imitation jewelry and silver are falling under 3% tax rate. So these are all the types. Comparison before your GST reforms and after, you can see the comparison 2.5 and earlier it is 9%, sorry, 18%, now it is 5%. And some goods like, so I'm not going in detail all these items. So now coming to the exempted goods. So exempted goods. Earlier, we used to refer 2/2017 notification, a rate notification to check what are all the exempted goods. Now, that notification has completely rescinded. In place of that, 10/20/25 notification has issued. In this notification, there are 166 different types of entries are there. In addition to this, the following items have been added as an exempted goods irrespective of the classification, whether it may be classified under any chapter. All these goods like puja samagri, supply of lottery by any person other than state government, and supply of goods by government entity to central government or state government against grants, and parts for manufacturing of hearing aids, Raki, and supply of gift items received by other government authorities, and all these now falling under exempted goods. Sir, would you like to add anything, sir? Rajesh, sir?
With this, I think, the 28% effect, that is certain products or product. I think that as of now, it's a temporary measure. Still that compensation is removed. Once the compensation is removed completely, those will become also public.
Yes. Yes, sir.
I think that is the one thing. Second thing, I think the impact of those changes varies industry, entity to entity, businesses to businesses. So it is always invited that if we go through the classification, different classification correctly, identify the correct classification, identify the rate of tax as per the new notification, and put that in your master, whatever your price master.
Not audible.
Sir, your voice is bit low, sir.
Okay. Is it clear now?
Yes, somewhat better.
Okay. Now, what I was just trying to show you, better to look into each of your businesses, look into your costings, what will happen, and look at the pricing, what you have to increase. Because especially wherever your product is getting exempt from, correspondingly there is going to be loss of input aspect. So the loss of input aspect, if you don't factor into your reverse pricing, then ultimately there's going to be effect on the bottom line, profit in company. So one has to look at that and certain procedurally the classification has to be relooked and I really see whether your product is rightfully entitled for the revised rate and further your price masters and the classification master in your software you must do an exercise of relooking of it and putting the appropriate entries and appropriate classification there. There is no problem for the later time.
Okay, sir. One more thing I want to add with respect to the compensation says. So most of the automobile dealers having a lot of compensation says trade balance. Not only the automobile dealers but also the coal traders. Earlier, the GST rate on coal is 5% and uh, per ton 400 compensation cess has to be paid. Now that GST rate on coal had increased from 5% to the 18% and they have removed the compensation cess on the coal. So earlier, compensation cess credit can be set off against cess liability only. Because of the earlier, many of the manufacturers cannot be set off this cess, input tax cess credit because they don't have any output cess liability. That's the reason they cannot use to set off. That used to become the cost that time. But now, though the tax rate on GST has increased from 5% to 8%, now the manufacturers can take the ITC on that. Earlier, that option is not there because their end products, most of the end products of the manufacturers are not subject to the cess credit. So now, as the cess on coal has removed and the GST rate on coal though increased from 5% to 18%, they can now the ITC on the GST can be availed by the manufacturers. So that way even the cost of production will get reduced. Earlier that used to become the cost, and also in that trade there is a lot of doubts about the credit balances of the cess because the cess is completely removing by 31st March 2026. That's a sunset clause. By that time the completely cess will be removed. So what about these credit balances? There is a lot of questions whether this cess credit can be transition to the GST, like how the from past GST pre-GST regime to GST regime, we have transferred the balances, the sunwet balances like that. Whether that option will be there for transition of this cess or not, a lot of questions are there. But in the FAQs, they have said that they are asking to reverse the cess balances if anything is there, but there is no clarity from the government whether they will give the transition of this credit or not. So we have to wait and watch. It's a what decision will be taken by the government. As per the recent media reports, in the hands of the automobile dealer itself, there is nearly 25,000, 2,500 crores of cess credit is lying with them. So we'll see what the government will take a stand on this cess balances. So moving on to the next part. Over to you, ma'am. Ashika, ma'am.
I think Ashika should be take these questions at this point in time rather than moving on to the services.
Sir,
Should we take questions at this point in time before
Yeah,
we go
we'll.
to the services? You can ask
Okay, sir. Okay.
participants to take.
Okay, there are some questions in the chat box, and after that, you can take on services. are they exempt or
Any participant have any query, they can either put on chat or unmute and ask also.
If this some questions are there in chat box, you can answer it.
yes, sir. I will read. This question is from Ambika. Question is that how to get registered under the composition scheme for fly ash brick manufacturers. If we change from regular to composition, it says if we are fly ash brick manufacturers, we cannot get registered under composition. So can we pay tax 6% GST without claiming the credit under the regular registration? That's the question, sir.
It's belong to registration. As far as we know, you will be under regular only, but you have to declare your tax rate at the rate of 6%. So means you are trying to change it from regular to composition, that will not happen. Under regular, disclose it at the rate of 6%. I don't think so any other query is there.
Nothing is, yeah. You can continue.
So now we discuss what are the law related changes is there, what is goods rate changes. Now we will be moving on to service. Now before we move on to service, the first thing which is in everybody mind is what should be the rate I should apply. So there is a specific provision, time of supply, which will decide your rate which is applicable. And for your easy purpose, same has been also put on the PPT. So if we see, rate is decided on the three terms. What are those three terms? When is the service or goods is supplied? When is the invoice raised? When is the payment received? These are the three things which determine your time of supply. Any of these three event, from this three event, any two event happening before or after will decide your rate. So there are three event out of which two event, if happened before rate change, then old rate. And if any of these two event happened after rate change, then new rate, simply. So just for example, if you will see serial number 1, all events, all these three events is happening before. So we are okay, fine. I have to put old rate. Now, what would happen if any of these three event, any one or any two event happening before or after? Simple logic, you have to see majority. So if two event happening before, then old rate, two event happening after, then new rate. You can put in any of this 8 scenario which has been put, same answer based on this law, this simple calculation, you will get it. Like over here in serial number 2, supply and invoice date is before, so old rate. If you will see serial number 5, one of the event means service is provided before, but two event, invoice and payment is happening after the rate change, then new rate. So based on that, you have to decide the rate applicability. Because before I move into service description, I thought first let us have a clarity what rate you have to apply, because this will be the most common question which everybody will be having, either they are into the good industry or they are into service industry. So out of 3, wherever 2 falls, means 2 event happening before 22nd, then put the old rate. If happening after 22nd, 2 event, majority you have to see. Based on that, rate will be decided. We will be giving this PPT, so I'm not going into all the 8 scenario. But if you remember this simple logic, you will get the correct rate to be applied. Now we will be starting one by one service discussion. Though there has been multiple changes on the services, but we will be focusing on few specific service industry, specific service categories. One of which is hotel accommodation. Now, we have seen in hotel accommodation how the rate has been changed from starting till now. So currently, what has they have said that if my room is above 7,500, 18% with ITC. Now the room which was below 7,500, they given me 12% rate. Now they have changed it to 5% without ITC. Now there is a problem. Now they given a reduced rate, but with a condition. So over here, what are the challenges which may arise? Few I have covered, but if anybody have any other also issue they are facing, they can put it in chat. First issue is with regard to advances. So there may be a cases you would have received the advances before rate change. Now you might be raising invoice after rate change. So two things happen. One is payment is received before rate change. Invoice is raised after rate change. Now third event, as I told you, what you have to see, when is the service provided? If service is provided before rate change, means your consumer, your customer has check-in hotel before 22nd and check-in and check-out before 22nd September. Then two events got satisfied, service is provided, payment is received, you have to apply old rate even if invoice is raised after 22nd September. Now, even though advance is received, but service is provided after 22nd September and invoice is raised after 22nd September. Two event, majority event happening after rate change, new rate to be applied. So that you have to keep in mind. Second problem, how to deal the same in your GSTR1. Now you will say, okay, advance rate I understood. How about the reporting? Because when I would have received the advance, I would have reported at the rate of 12% in my GSTR1. Now suppose if new rate is applicable, how the same I should report in my GSTR1. Now if you will see, advances are reported as a summary level. There is no breakup of rate goes. So while reporting about the advance adjusted after the rate change, then also you will be report at the rate of 12% because you already paid on advance at the rate of 12%. So now also when you are reporting in R1, because invoice will be 5% new rate, but advance reporting you will be doing based on 12%. This is how adjustment need to be made. Now you may say me my invoice, if suppose one invoice only 100 rupees, 5 rupees is a tax. Advance adjusted, if I am saying, suppose it is 10 rupees on which tax comes to, let me change the example. Okay, so suppose my hotel booking which has happened is 1,000 rupees, 5%, 50 rupees tax I have to pay. Now when I receive an advance of 100 rupees where I would have paid a tax of 12. So you will show 100, 1,000 rupees, 50 rupees as a tax. Advance adjusted, you will show 100 rupees and 12 rupees as a tax. So 50 minus 12, it is what the tax you are liable to pay in 3B. This is how you have to report in your GSTR1. Now, second issue, ITC ineligibility. Now, as it has become without ITC. So the moment it has become without ITC, after 22nd September, you have to check which is exclusively used for room below 7,000. No ITC will be allowed. You can determine exclusively use because if a room has a AC and you did a repair of the room which is below 7,500, no ITC. Now, second question which arises, I am talking about the current ITC, current tax period, where the rate change happened. Okay, I will take care of the ITC, which is exclusively used, I will disallow. Which is commonly used, I will proportionately disallow. Or proportionately to the extent of where I am eligible above 7,500, I will claim. But what about the past ITC? ITC, which I have already availed when it was taxable at the rate of 12%, will be there any impact on that? On that also, there will be an impact because common ITC reversal, Rule 42, it says after the year end, I have to do final calculation. So you have to do your final ITC calculation in total for the full year by considering the turnover due to rate change, which has become not eligible for ITC. So ITC need to be reworked after the year end as per Rule 42. That also need to be checked. But there is always
Ashika,
a notion.
Ashika, one practical question. As a hotel, I've received advance booking before 22, where including taxes that are collected full price.
Yes,
Now,
sir.
which the customer section after 22nd, so it's 24th, 25th, that's the kind. Okay. Now, as per the first invoice, the amount he has paid extra amount. What do I do with the extra amount?
Sir, I will adjust it with my subsequent tax liabilities. It
No, no,
will.
not from your perspective. I'm telling from the customer, poor customer.
Sir,
Yeah, for example, I have paid 112 rupees, not 112, 10,000, 11,200 rupees I have paid, including taxes. Not at the wrong example, sorry. It should be less than. So whatever, 8,000 plus 12%. I paid completely at the time of booking, advance. Okay. Now you have paid tax on receipt of advance. Subsequently, I checked in post, so you will raise an invoice at 5%. So what happened to this extra tax which you have earlier collected from me? Will you pay me back as for a user?
Now, so that is also one issue. Now over here, if you are able to pay it back, you can raise advance refund voucher also comes. That I can use. If you are not able to pay it back, tax collected need to be paid to the government, section 76. So whatever tax you have extra collected, you have to pay to the government and you can't adjust it subsequently also. So if you have fully collected the value with tax and you have not returned it back the extra amount collected, whole of that tax need to be paid to the government. At the time of raising the invoice, though you will be declaring it at the rate of 5%, but with that advance adjusted detail need to be furnished accordingly with, and if you have refunded back the extra tax collected, then you can do refund voucher. That is my opinion, my personal view, that in
No, I
that way we
think
can do the.
you exactly told, you exactly hit on my right, sir. So that is exactly what I wanted to emphasize for the participant. Merely not only our adjustment, what happens with the customer money also needs to be decreased. That's where I wanted to emphasize about the point. So you rightly answered. And there is some question on composition you can address if there are some questions. What?
Okay.
Yes.
You want me to refer now or afterward?
Now only you can answer since we are broken for discussion. There's this composition hotel and you can answer.
So by composition will be taken by hotel where 6% is a liability and that to be discharged by SSC himself. So it is advisable to come out of composition to 5% without ITC. Okay.
You'll answer that?
Yes. Yes, sir. But this will be depend.
The question, no, I think the question appears to be with the understanding that it's an option. No, it is not an option. This 5% scheme is without ITC is a compulsion. That's what it is. After you re-explain that what I
So they are linking it with composition scheme where 6% is the rate for
5%
service.
are assumed it to be composition. So you please explain it's not a composition. Can you please explain the difference in composition and 5% rate without ITC.
Okay. So, sir, this is basically a regular rate, 5% without ITC. It's not a composition rate. So, and it's a mandatory rate based on if we are opting for a regular tax regime, regular normal tax regime, then this is mandatory rate which need to be applied of 5% without ITC if below 7,500, and if above 7,500, 18% with ITC need to be mandatory applied. I can't switch, I can't change, I can't make all my room at the rate of 18% in order to avail the ITC, because this will all be determinative factor and you have to follow mandatory. If you don't follow, obviously when the officer will come, even though you paid 18%, they will ask you to reverse the ITC on the same.
Ma'am, I have one question.
Yes, sir.
Yeah, so suppose in a month for 3-4 days my room rent is above 7,500, and the rest of the days it is 7,500, below 7,500. So shall I have to pay the tax on whatever the days which is above 7,500?
Yeah, rate will be applicable based on the value actually charged. So if for few days you have charged above 7,500, for those days, for those room, you have to charge 18%. Actual
Okay.
value will determine the rate, which rate to be applied.
Okay, thank you.
I think what Ashika said is correct and fine, but whoever asked that question, sir, be conscious that if you are also having a restaurant in the premises, okay, in any, even in a single day in the previous financial year, if you have charged for any room more than 7,500, then the entire restaurant billing cannot be at 5%. It has to be compulsory at 18%. So that will be an effect of you charging only few days at the rate of, I mean, more than 7,500 in a previous financial year. It will become a specified premises. So all your tax liability on the restaurant will get affected, though the rate of tax for the accommodation service, that is the hotel services, will be as per these rates. Hope that my answer is, your question is addressed, and also the aspect which
Yes,
I
sir.
want to emphasize is
Impact which will have.
Yes, sir. Thank you.
Okay, so I was coming to now restaurant service only. So if you have a restaurant service in the hotel, now there are people, they were using restaurant service was having two rates, 5% and 18%. 5% again without ITC, 18% with ITC. So there were people who were thinking that it's a optional, any one of the rate they can opt. And there were people who were doing 18% with ITC. Now they have clarified that 18% is only applicable and person is only liable when the restaurant service or restaurant is at the specified premises. Now, what is regarded as specified premises? Where any day, any room have been charged above 7,500. Any day, any room means even a single day, if you have charged 7,500, it will qualify as a specified premises, and restaurant located at that premises, 18% will be applicable. And only those restaurants will be liable to pay tax at the rate of 18. It is not an option available to restaurant that they can choose which rate to apply. Restaurant which are not in specified premises, they have to mandatory follow 5% rate with no ITC. And as sir rightly pointed out, because there are cases when the pujas and all are coming, or some festival or some things are there, hotel's rate get increased. This hotel rate increase may make them qualify as specified premises, resulting into restaurant taxability also at 18%. And that applicability will not be for a day. It will for continue fully till the time chapter is closed. So it's not a one time, it will keep continuing financial year wise, you have to check.
Yeah, that as rightly told at the end by Ashika, what will be, how you are going to see whether in the previous financial year, in any single day, you are crossed. So for the present financial year 25-26, we need to see whether in 24-25 any day, whether 7,500 above was charged. Same way for 26-27, if you have charged any day, you during the year 25-26 more than 7,500, then your restaurant has to compulsorily charge 18%. So that is the criteria you need to look at. Yeah, you can continue, Ashika.
One minute. Now, another important change is with regard to local delivery charges. Now, the first thing which arises with this word is, what is local delivery charges? Not defined till now. Under GST Act, they haven't defined. But CPC 1, over there 6803, define what is local delivery charges, where they are saying delivery of food and non-food item. But over there, they are excluding furniture and household item. Okay, so this is just a brief I am giving in other places where it has been defined about local delivery charges, but time will decide how they are going to treat this. One means how wider this definition is going to happen. Second, this local delivery charges has been specifically excluded from GTA. So they themselves are saying that this delivery charges will not be considered as a GTA. So you need to be careful. If there is a transporter who is transporting the goods, like a local only, but now the question which arises, will qualify as a GTA or a local delivery charges? Here they are distinguish this delivery charge through how it is provided. Means if it is provided through e-commerce operator or e-commerce operator is providing the service. So based on that, local delivery charge, the taxability will be determined. Second, there is a under GTA, under exemption, we have a specifically that individual truck owner will not be considered. Entry number 18, where they say GTA, courier service, those are liable under GST. Specifically providing that individual truck owner have a exemption. Over there also, in that exemption, they are saying this exemption will not be applicable for local delivery charges. So if there is even an individual truck owner who has been engaged or providing a service through an e-commerce operator, then they will also not qualify for exemption. Because normally what we have a habit, multiple GTAs were appointed through e-commerce operator for doing deliveries and all, door-to-door deliveries. Now all those being excluded from the definition of GTA, not eligible for exemption. So you need to be careful to check. If you fall under this, then 18% GST is applicable. And if you are providing it through e-commerce operator, they are saying, then e-commerce operator is liable to pay under RC. So this is one important change which has been brought out, and it's going to impact the transport sector because they have to see how they are providing these services, through whom they are providing these services. If they qualified under this, they might be liable under RCM or FCM, which will depend upon the circumstance. That if provided through e-commerce operator, then under RCM. But if they are engaged through e-commerce operator, means they are not using through e-commerce, but they are engaged by e-commerce operator, also need to be checked.
Ashika, I want to come in over here. There has been this whatever we are saying, etc. There is a little of a confusion the entire thing when we practically look at this. It is not talking about the last leg delivery services. It is talking about GTA services. There is also one more entry amendment in the rate notification. Other than GTA, I mean transportation services also, there's some changes. We are not getting into that. Here, GTA, there is nothing but transportation of goods and issue of consignment note. I repeat, transportation of goods and issue of a consignment note. That is the service we are talking about. In such a scenario, practically, where is that e-commerce operator services are operating? I could only think of like, porter. You want to transport your whatever your home articles to somewhere, small things, some fridge from one place to another. You will go to porter and ask for book on small canter, small auto. I think there is a possibility of these fellows coming, but there it also comes with last whatever that you just now said, the delivery, last leg delivery, whatever. So I'm not able to envisage really what is intended to be covered here, or is there trying to only plug holes some of the people who wanted to escape a tax liability, not who are in the total pipeline of this entire delivery system of e-commerce operator system. So we have to just understand that thoroughly before we actually conclude on this. At least I could not categorically conclude on who will be covered in this practically. If you get something to your mind, you can just share it, Ashika. Ashika, you there?
So
Jagdish?
what
Yeah. Go ahead, Ashika.
So what I have seen is there are various apps who charge separately delivery charges and all.
Okay.
And they have engaged another person to do the delivery for themselves.
Okay. So is it not a composite supply then?
No. And whatever, though delivery charges is routed through them, means through e-commerce operator, but they are not providing the service. They are just collecting agent, and they are collecting and paying it to delivery person whom they have appointed agents.
Okay, I got your point. Still, I have my own reservation because of the reason that section 15, the definition of composites, I mean, explanation to composite supply say, when any transportation incurred in relation to transport of goods, the value of the transportation shall become a part of the taxable value or a value of a composite supply. So that being a case, how can there be a two separate supply? Okay. Anyway, we can discuss that later. So for the general public information, this issue is going to be questioned and there's going to be many debate on this. We'll continue with the other topics, please.
Until and unless they define what local delivery charges they are expecting to cover, it's hard to understand this scope.
Yes, completely agree. Yeah. You can proceed, Ashika.
Yes. Transport of goods. So here, transport of goods, these are all the rate changes they have brought. Wherever it was wherever it was 12, they have converted into 18. Now, this is going to be a one impact. Like one, for example, if I discuss, is like GTA. Normally, what we see is GTA normally opt for RCM, or if they offer FCM, there they opt 18% with ITC only when they have purchased a truck or a capital goods, so that they can exhaust the ITC to the extent of capital goods. That time only they do that. So here earlier it was 12, so capital good duration of ITC can be extended. My mean to say, when it was 12, maybe it can be adjusted till 5 years or 2 year, 1 year, whatever may be the scenario. Now it has become 18%. Now it will be a lower year. So that is what the one impact came into my mind. And plus, With 18%, obviously counterparty will be getting ITC. Wherever ITC won't be available, that time it will be a blockage. So means it will be a cost. So if it is to a end consumer, wherever tax applicable, it's an increase in cost to the consumer. Anything on this you want to add, sir?
I think major impact of the transportation is not on the transportation business, but on various other businesses. What I can envisage is all this FMCG distribution chain, whose majority of the goods are reduced to 5%. Their margin generally kept at 2%, 3%, or so on. Okay, so out of that, major cost of theirs is a transportation or this go down rent, where input tax will be at 18%, whereas output tax is going to be 5%. There's going to be accumulation of input tax credit. As you know, that input tax credit, inverted tax structure refund is available only in case of a goods purchased, but input services, there is no refund. So I am envisaging in a days to come, many of these FMCG dealers will start accumulating the credits, and they will be in a position not even to go to claim refund under inverted tax structure also. This is what one of the impact which I am seeing. Okay, Ashika, you can proceed further.
Then this relate to passenger transport. Similarly, like transport of goods, for every 12%, they change to 18% with ITC. Here, the main over here, if I can say, from the recipient point of view, like renting of motor vehicle, ITC is specifically blocked. So if any of the recipient get the 18% invoice from a supplier, then it will be a cost to them. This is all job work sector. Again, here they have reduced the rate from 12 to 5, but it is coming with ITC eligibility. Works contract earlier for government related work.
Okay. Ashika, you talked about job work. There's other than specified job works is increased to 18%. No?
Other than specified is increased to 18.
So there may be implications on some of the sectors, cash flows issues and all this. Because specified sectors is where output goods are at tax rate 5%, the job work relating to that has been made 5%. But in all other cases, it is increased from 12 to 18. So there may be some challenges over there, practically, especially with the manufacture of some exempted goods, etc. Okay. Yeah.
Works contract service earlier when it provided to this 3 composite supply of works contract when provided to government was at a lower rate 12. Now all has been made a standard rate of 18% with ITC. So the reduced rate which was given when provided to government has been removed. This is our other rate changes. You can refer. Sir, in any of this you want to highlight something or should I move ahead?
No, I think you can proceed further, unless the participants have some questions, specific things they can ask on those. You can proceed now. Otherwise, we can come back on the question and session.
Now, this is the only exemption which they have given apart from rate changes. So this relate to life and health insurance, which you have been listening to many people who have said that life and health insurance now has been made exempted. The dispute which was going whether group insurance will be covered or not, that has now been ended. In the notification, they have specifically mentioned that it only cover individual and family of individuals. So group insurance, which is taken by the companies and all in an employee-employee relationship, will not be covered. There is a specific explanation for it. So only individual and family life and health is exempted. Even there was a question, what could be regarded as a health insurance? Means what could be the ambit or scope? That also they have defined. that health insurance business means which is provided for sickness benefit, medical, surgical, hospital, whether inpatient, outpatient, travel cover, personal accident cover. So this type of health insurance are only eligible for exempted. So thereby ending the dispute which was happening before this note. These are all given in notifications. So before the notification come, there was doubt was going whether group insurance is covered or not, or what will be the scope of health insurance. All they have clarified. So if it is in this scenario, then only exempted. So if we see at a consumer level, individual level, due to this, obviously there will be reduction in the cost of insurance being purchased in totality. But cost of insurance will not automatically will get reduced by 18%. Reason being, due to exemption, there will be a credit loss to the insurance company. So to that extent, their insurance premium will be decided. Though on that insurance premium, there will be no GST on it. So there will be little 2-3%, maybe an increase in insurance premium, but obvious 18% GST impact will be removed.
I think there is a discussions which are going on at the ministry level to arrive at that quantum of the benefit to be passed on and the manner of passing it on and how to compute the premium. Those discussions are already on the table. Probably it has been happened already. It will be published shortly by the insurance company, because the premiums which are going to be due effective September or the premium for which period, all those questions are coming up. So I think on that specifically, the insurance companies may come out or the government may come out and clarify those shortly.
Because there is a common question that insurance premium is paid for a year. So will before 22nd September, part of it with 18 after that exempted.
Yeah, exactly. See, I am a person who don't want monthly payment headache, then I'm not getting this benefit. Whereas you opted for month-on-month payment, so you will get the benefit. You'll be getting more benefits. So I think those are being discussed to see that how to equalize that and pass on to everybody. Some such discussion is going on. We do not know ultimately what will prevail.
So we have gone through what are the 56 GST Council, what is Finance Act clauses has been notified. Now we went through all the rates. Now the question will arise, what is the impact of this rate changes and what are the challenges ahead? So this is what I felt I have written, that if there is a reduction in rate and where there is a condition without ITC, then obviously there is a credit loss. So it's not that overall tax rate reduction will be passed on to the end consumer. Obviously, there will be increase in cost due to this credit loss. One. Second, where your input rates are higher and output rate is lower. If you are eligible for refund of IDS, then you may get the ITC refund. Because of this all of sudden rate reduction, there will be an accumulation of ITC. So you have to check whether you are eligible for inverted duty structure. Inverted duty structure, you will eligible only when your input is at higher rate and your output is at lower rate. It is not applicable just because of change in rate. Don't assume that as now because input accumulation, if it is ITC accumulation, if it is happening only and only due to change of rate in output tax, then you are not eligible for IDS. You are only eligible if your input tax rate is higher than output tax rate. Keep that in mind. Don't assume now rate got reduced, that's why it is getting accumulated. You won't get immediately eligible for ITC. You have to keep in mind trading, people who are in trading, same input, same output, due to this rate reduction are not eligible for inverted duty structure. There is a specific exclusion which they have given through circular. Person who are in manufacturing may get benefit if their inputs rate, any of the input rate is higher on input compared to output tax rate. Then if there may be increasing cost based on the ITC it need to be worked upon. And there may be a case where ITC is specifically blocked, then also cost will goes up. Like GT and all. Like GT and all, where if you are if any of your transport are charging 18%, you have to check what would be the impact of it. Because whether you are dealing in exempt and taxable product will also determine the product pricing also. This is much from my side, sir. You can add.
Another major challenge or major questions which are being raised is about what happens to the goods which are in the stock of all the retail store or various other stores in the market, in the shelf. Whether those people need to re-sticker it, relabel it, some WhatsApp messages, some circular, they're seeing it. Let me clarify firstly, the obligation, or rather any person who can put a sticker on pricing labeling on the pre-packed goods, it can only be either manufacturer or importer. In case of other than drugs and cosmetics, packers and repackers also, with a specific license for the same. So other than these, the regular wholesaler, all these mall stores, various places where they're kept for sales, they are not entitled to alter any price sticker on the goods. So that being the case, what is that all these circular which are being spoken about? They are saying if the goods are still lying with the manufacturer, they are supposed to repack before being dispatched, relabel it before being dispatched. In addition to that, it is expected that they give a revised prices list to all the dealers, distributors, and publicize the same in social media and direct them to pass on the benefit. These are the procedures they've set. In case of drugs and pharmacy, drugs and cosmetics, there's an additional, there's a specified form, which is Form 5 in case of drugs and formulations, and Form 6 in case of medical devices, which they need to follow, which they need to submit to controller of the state, etc., as well as the distributors and retailers, the revised price. And if the customer wants to see, they should be given opportunity to verify the same. So these are the procedures strictly. Now the question is whether the retailers are also required to pass on the benefit to the ultimate customer, though it's a direction. If somebody doesn't do, whether there can be any action under the GST law. Under the GST law, there may not be any action, but the possibilities of the action under the standard weights and measures law, read with package commodity rules, or under the Drugs and Cosmetic Act with the rules, is not ruled out. So this is what I want to emphasize. I think now it is open for participants to ask your questions either through a chat box or through a opening. You can unmute and ask a questions. Ashika, you can take a questions. I'll supplement if there's any requirement.
So one query is, in case developer where GST rates for material are reduced drastically. Now, if developer pass on such benefit through discount to already booked, but under construction unit, can we reverse GST on revised price, and how to treat this in GST? They have specifically for construction industry, they have given one circular. Not now. I'm talking about when they have given for cancellation. There are cases where cancellation happened after 1 year, 2 year of bookings. So they have bypassed section 34. So they are saying on cancellation of unit with all the relevant documents. credit that you have refund the tax to the party and all those thing compliance done, then you can as a developer can claim the refund of GST paid. So I'm taking support of that, and I'm saying you can raise a credit note now to pass on this reduced rate tax benefit. This is what I feel. Sir, what about you?
See, first of all, if you ask me, is it compulsion for them to reduce that particular pass on the benefit? Answer, in my opinion, is no. If it's a compulsion, answer is no. But however, uh, if they want to still pass on, if already amount is collected, they can issue a credit note and within the time limit adjust. If it is not, then the customer has to go and claim a refund. I think most very unlikely that this is going to happen. Okay. If still unbilled amount is there, that can be adjusted in the future payments to be done by the customer. If it's something all the amount is collected, then they want to give, it can, because the only reduction is happening for the future construction work. I don't think it will affect the past. It should happen only for the future unless the entire amount is paid in advance. Hope that I answered the questions as whoever has asked that.
Another query is explanation of works contract, specifically construction of road and bridges of government tender. At present, 12% is at the rate of 12%. No, sir, from 22nd September, it is going to change into 18%. So maybe if you have given. Sir, can you ask your queries because I'm not getting proper clarity. Are you asking that you have already applied for a tender by specifying 12%, now it got changed to 18, or because now 12% will no more be applicable? Are you asking how to deal with that, or are you asking is it 12%? Then today date it is 12, from Monday it is 18.
Again, the time of supply in the rate change already explained 2:1 formula. So if you have completed a work today and issued an invoice before 22nd, old rate. If you have not issued an invoice, if you have not completed the work, both two events has not occurred before 22nd, then the new rate. If your contract is firm and already inclusive of all taxes, then you have to go and try to renegotiate. The government in certain cases had issued a circular to give an increase in whatever the work happened after that date. So probably there's going to be again a tug of war between the government and the contractor for most of these contracts.
Another
Sir,
query.
if any other if you need further clarity, you can unmute and ask a question, sir.
Yes, sir, I have some questions.
Please tell us, sir.
Sir, this only penalty demand is there, and it is lying in the first appeal has been dismissed. So now I am going for tribunal when it's going to start. So it's a case of 18, 19, and the order was in 2023. So still this penalty 10% has to be deposited for these old orders, which is effective from 1st of October 25 in tribunal.
Unfortunately, yes, sir.
It will be applicable because it is if it is for the order after 1st October or also for
No, sir. All the appeals being filed after that.
Okay, for
Any appeals
every
being filed, any appeals being filed after the amendment 1st October, that will be applicable.
Okay. And so two more questions, small one. So one is the place of supply. So if the invoice is done, invoice is done, but goods to be received and payment has to be after 22. So what will be the rate? So today I am doing the invoice, but the goods will be delivered on 25th and payment will be after that.
Ashika, will you address this? Sir, there's something called Section 14 of the
Yes, yes,
CGST Act.
yes, sir.
Time of supply in the scenario where the there's a rate change. That, as per that, if the supply has happened before the rate change,
Mhm.
okay, is a
Mhm.
one clause. Other clause is supply has happened after the rate change. You will fall
Yes,
into that thing. So in such a
yes.
scenario, if the invoice is raised
Hmm.
after the rate change,
No, sir.
okay.
Today is I have in
No,
issued
I
only.
understand, sir. No, I'm
Yeah.
just telling. Then new
Sure.
rate. If the invoice is raised old date and also payment is received in a old date, then old rate. If the payment is received later, then it is a new rate. In your case, since both are happening in the uh, new rate regime, the new
Yes, sir.
rate is supposed to be applicable. So you may have to raise a supplementary invoice for the differential tax amount. Having said this,
Okay.
I am trying to invoke your attention
Sure.
to the fact that you mentioned in your question delivery happening later. Okay,
Yes, yes. Delivery is on 25th.
correct. But whether the title to the goods have happened earlier or not, if you check, sir. Okay, see, ownership would have transferred, but delivery is happening later. Is that a possibility? Is a exceptional cases. Okay, because
Okay.
GST is on supply. Supply happens on transfer, sale, barter, etc., etc. Okay,
Mhm.
so
Mhm.
sale is transfer of title. So when
Mhm.
the ownership has already transferred, if you can able to establish, then old rate applies. If you're not able to establish, ownership is not transferred, only the invoice is raised, then you
Mhm.
can't help, sir.
Okay. Okay. And the last one question. Sir, I have I have one notebook factory. So we having a huge holding stock, and
Hmm.
so only we are dealing in notebook factory, nothing else. So now
Hmm.
it is completely exempted. So
Hmm.
already I have the raw material what I have purchased already I have paid to my supplier. So
Hmm.
now, suppose I have holding a 5 crore stock. So
Hmm.
I have around 50 lakhs ITC, but in my
Hmm.
output ledger it is nothing. Shall you say that I have to pay it from my cash ledger 50 lakhs, or and I have to increase my
Exactly.
cost?
Exactly.
And I can I increase my cost because it will be coming the same what I
Yeah,
was in the old rate.
that is exactly what Ashika was trying to see. You cannot pass on the entire benefit. You have to factor in the possibility of the loss of credit because of this. See, what is going to happen here? The paper, what was the rate, sir?
The 12%.
See, 12%. Okay. Now, I think probably there may be a situation where you cannot, what is the stock of finished, what is to be computed is inputs, inputs as it is, input contained in WIP and finished goods, so that
Yes.
you have to convert into back to those prices. Okay.
Yes, sir.
Whatever. So now, whatever the your reversal will be at 12%,
Mhm.
whereas your output tax is 5%. Earlier, I
The,
think you would have gone on
the
the
output
inverted
is
tax
zero.
subsidy.
The output is zero in notebook.
Now, sir, I'm telling earlier. Earlier notebook, what was the rate, sir?
Earlier it is 12.
Well, okay, I thought it was 5%. Then no problem. Then I think basically you're effectively around only you can pass on 2 to 3% is my understanding, because value
Yes.
addition might not have been too much on those products.
No much. Only labor 20% labor cost.
Yeah. So I think
So
if there's going to
can I sell in my higher rates? There cannot be problem. Anti-profit is not there, but will not be a problem if I'm selling the
no,
same product in same rate.
this is not a packaged commodity, no, sir. I don't think that there will be a problem.
Okay, okay, okay. Thank you, thank you.
Yeah. Any other questions?
That's there in chat.
Yeah, you address ma.
Excuse me, sir. Hello.
Yeah.
Yes, with respect to section 34, okay. See, the we have supplied the material and customer has returned back the material. To the extent of responsibility of raising credit note or debit note is for lies on we being a supplier or the customer can raise debit note to the portal.
Sir, you have sold the goods earlier. He has
Correct.
returned the goods. He has returned the goods.
Correct.
You are supposed to raise a credit note for that within the
Okay.
time period prescribed. That is the next year, November.
Yeah, that's what the responsibility lies on we being a supplier. We only has to raise credit note, correct, na?
Sir, your accounting credit note, accounting debit note, whoever may issue. But on the
Okay.
GST credit note 34 has to be issued by the supplier. From the
Supplier
GST
only.
perspective, the
Mm.
credit note and the debit note has to be seen only and only from the supplier perspective.
Okay, sir. Fair enough, sir. Yeah. Thank you. Thank you.
Okay.
Yeah,
See,
yeah,
in
yeah.
such case, there's one circular in the regarding medicine and other products where they say if the time limit has already lapsed, then he will raise an invoice. He cannot raise debit note.
Okay, okay, okay,
See, for return of these goods,
okay.
if he is not able to collect, then he can actually raise an invoice like a resale.
Because what they are contemplating that since we being the supplier forgotten to raise the credit note, it is the customer who should have raised the debit note at
No, 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 sir.
GST.
No, sir. No, sir. No, sir. No, sir.
That's the debate is going on like
No,
that, sir.
no. That is one. Second, once the goods are returned, there will be a question on them that, he should reverse ITC.
But the customer is very much contemplating you being the supplier, you should have raised the credit note at GST perspective. You don't force on us to raise debit note at the GST perspective portal.
He is right, sir.
Yes, 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 sir. Correct, sir. Yeah. Thank you, sir. Thank you.
Okay.
Yes.
Sir, are there any rights to the consumer to ask for the price reduction?
Under the GST law, no, sir. And other than package commodity rules, then no other avenue are left for them.
Okay.
Packaged goods, drugs and cosmetics. Then they may go to those acts and try to inform. Ashika, you said some questions have come.
Part which you answered. Credit about that there is no need for compulsory.
Yeah. Okay, fine.
In continuation to that, they have asked, do developer need to revise registered agreement value or discount entry is enough?
Obviously, the agreement has to supplement by some communication. It is not necessary that one more stamp paper agreement has to be entered into all those things. Any communication where mutually accepting that would be sufficient, in my opinion.
And we most of the time in agreement we write GST as applicable. We don't write quantify, no?
Yeah.
That will work, so no need to revise. Okay. And I have filed another query, sir. I have filed an appeal by paying 10%. I haven't been called till date. What happened to those cases, sir?
You answer, you know better.
Sir, it's all, this all.
Two possibilities. Okay. One possibility, the order is already passed against you and uploaded. You might not be aware. You would have not checked in, or they would have not uploaded manually. They would have kept signed and kept in the file. Is a one possibility. Other possibility that still awaiting for hearing, which I think presently 2 years, 1.5 years, pendencies are there in different places of appellate authority. There's a third possibility, the department would have forgotten about the case. Very rarely it happens. Okay. And no doubt, today or someday it will wake up and it will come back. Don't be happy with it.
And if you want to do it early, you can write a letter, go to department, follow up also and get the hearing. If you wanted to do early. Another query is only class notebooks are exempted or corporate diaries or journals are also exempted.
Jagdish, for you query.
Yes, sir. Actually, they have given all books are exempted now. The diaries, I have to check their HSN.
Yeah.
Yes, sir.
You can ask them to separately
Yeah,
message
separately
you.
you can mail us, sir,
Message.
so that we'll give the answer to that.
Okay, we came to the end of all the query which were there in the chat. So thank you. So now, sir, I'm concluding then.
Yeah. I think we should thank all the participants for being there, present, and giving us this opportunity to share our analysis. And at the same time, whoever had the questions, sharing also enriches our knowledge. Thank you. I should thank Mandala Accounting for enabling us to conduct this program. And once again, thank each one of you. Thank Ashika and Jagdish, who has spent substantial time in preparing and also preparing the presentation. Thank you. Thank you,
Thank
one
you
and
to
all.
Rajesh sir for giving his time and expert opinion wherever it was needed. Sir was adding every time each value which required to give more insight on the topic. Thank you, sir. And thank you for
Thank you.
participant. If anybody have any query, do write to us at venu@vnv.ca and do give us the feedback, what session you want us to do conduct, anything you feel we should do to improve more, so that in both way it keep going, learning to you also, learning for us also.